Hey everyone, and thanks for jumping back into the cryptoverse. This is the weekly Roundup premium video. Hopefully you enjoyed the content. We're just going to take a tour of a lot of the different cryptocurrencies. I'll give some of my thoughts. Some of these thoughts I've already provided in the Telegram channel, obviously, but I want to provide a comprehensive update for those following the markets. So the Bitcoin risk is now 0.517, so it's pulled back significantly over the last couple of weeks. We know that Bitcoin went all the way up to 67K, more or less, right? 2/3 of $100,000, and we've since had a sizable pullback. I mean, not a huge pullback by any means, like 10 to 15%, something like that. Yeah, like about 11% at the time of this video, but it went all the way down to 13% or so down. So again, right now, the risk on Bitcoin still is above zero point 0.5. Therefore, I am not personally DCAing it. Okay. You might think, well, why not? Isn't Bitcoin, don't you think Bitcoin's going to go higher? Well, I do think it's going to go higher, but my cutoff for buying Bitcoin is just a zero point 0.5. And we had 5 months after the May drop to DCA Bitcoin, 5 months. And I got my Bitcoin position back to a healthy level. Now I've been focusing on other accumulation of other projects. Ethereum, just as a reminder, 70% of my DCAs are going to that. And look, the risk on Ethereum now is 0.469. And as long as it stays below 0.5, I still would argue that it's a relatively decent buy. Remember, the Ethereum market cycle peak is likely, if I had to guess, it's probably in the 0.8 to 0.9 risk band, somewhere in that area. So I don't think it's going to make it up to these higher risk levels because we're not accounting for diminishing returns with regards to the Ethereum risk metric. But if you look at these prices up here, that sort of gives you an idea of what could still come depending on, and of course that will depend on when the market cycle peak actually occurs. The longer it takes us to get there, then ultimately the higher we can probably go. Okay, so keep that in mind. If we go to 20K in 4 months, then there's a good chance that's the market cycle peak. If we go to 7K and hang out there for 3 months, then we just have a new area to build off of for hopefully a launch later on. So again, that's why we say time is on our side. The longer it takes us to move higher, the higher we should ultimately go. All right, so I think Ethereum accumulation right now still makes a lot of sense. ADA, ADA risk right now is 0.360, and I don't want to talk about this one a little bit because I mentioned in the Telegram channel earlier. Right now, it is actually on the bull market support band, so maybe we'll get lucky and see a bounce here off of the 20-week SMA. But one of the things I wanted to discuss with ADA is, in case you're not familiar with all the software development and whatnot. Why are dApps not being produced as quickly as you might have thought? Why are things not launching? Well, they're waiting for the Plutus backend to be deployed, and until that's deployed, a lot of them are just kind of waiting. Okay, it's a waiting game. So I've seen a lot of estimates based on when they think it's going to come out, or hearsay from other people. I've seen people say as early as late November. I've seen people say early 2022. But note that the argument all along was that Cardano will likely see a pump into smart contracts, a lull after it, and we likely will not have a breakout to the upside to put in new all-time highs until we actually see some development in terms of the Cardano ecosystem. And we haven't really seen that yet, and it still sort of goes into the idea of why I'm not thinking ADA is going to break out just yet. I think we need at least, probably another month or so at the very least. But then somewhere it could take out till late March. And I mean, obviously this will depend on the market cycle and whatnot, the health of Bitcoin and everything. But I would argue that ADA still has a lot of work to do to prove that people are going to actually use it. I do think it will come out the other side, but it's going to take time. And I said back over here, it's going to take more than just a month or so. And it's going to take many, many months. And you can see that it's sort of playing out. We are holding the line so far at the bull market support band. I don't know if it's going to hold or not, but if you're looking for a position in ADA, I would say you have plenty of time to DCA it. Okay, it's below 0.4. It's below 0.4 risk. So if you want to be more conservative and DCA below 0.4 risk, it's at 0.361, which means that until it won't even get to 0.4 risk until about $2.50. Okay, so plenty of room to DCA ADA. If you want to go up to 0.5 risk, you're talking about over $5 at this point. But I don't think ADA is going to make a sustained break to $4 or $5 until there's actually a little bit more development in terms of dApps launching on Cardano, and that can't really happen until the Plutus backend is deployed, and that still is a few weeks away. That is one of the reasons, again, why I think DOT is likely to outperform ADA in the short term. Okay, I would say over the next 3 months, there's a good chance DOT outperforms ADA. I'm not taking away anything from ADA. I'm not taking anything away from ADA. In fact, ADA has outperformed DOT significantly over the last or so, since the market cycle started. ADA has outperformed DOT. ADA is again just hanging out 100x up. Okay, so that's not to take anything away from ADA. It's more or less just a recognition that the market capitalization of DOT is in fact a lot lower. And if I pull it up here, you can see the market capitalization of Polkadot is at a very modest 40 billion compared to ADA at 64 billion. At one point in time, I don't know if you guys remember, but the Polkadot's market cap was about 1/3 of ADA's not that long ago, and you can see that it's actually catching up a lot. Right, you can see that it's catching up a lot, and I'm arguing that they really should be closer to the same valuation. And honestly, Polkadot could flip ADA over the next 3 months. I would not be surprised to see that. I still think ADA will do well and it'll trend higher, but the main catalyst that will give ADA that boost is to actually see development on the ecosystem. With Polkadot, you got the parachain slot auctions and whatnot coming up. There's going to be a lot of FOMO there, very likely, as long as Bitcoin stays relatively healthy, which it probably will. So with that in mind, I would imagine that Polkadot is likely to outperform ADA over, say, the next 3 months or so. I think ADA will ultimately break out, but we need a little bit more time. So you should have plenty of time to DCA ADA. Polkadot, looks pretty strong right here. Okay, I would still argue it looks relatively strong. We're well above the 20-week SMA, the 21-week EMA. We've got a lot of wiggle room there. I mean, we'd have to drop 34% just to get back to the 20-week SMA. Okay, that gives you an idea of how strong Polkadot is coming out of the gate here. And you can see that in terms of the weekly closes, we're not that far below the highest weekly close we've ever seen, which ultimately closed at $44.30 or so. Obviously, we know we've had wicks all the way up to $50, but we are getting relatively close to those levels. So we're not in price discovery mode yet for DOT, but I would imagine it's probably going to come maybe late this year, or could be next month for all we know, or early 2022. Okay, keep that in mind. Link. I still would argue Link is looking fairly good against the US dollar. We know that it still has not been doing so hot against Bitcoin and Ethereum, as you can see the Link Ether valuation still has a lot to prove. Okay, obviously with it dropping 80% against Ether over the last year or so, it does not seem that attractive at the moment. But I think the thing to keep an eye on is when we actually break this level, it could signify finally a momentum shift in the market. Until then, there's really no telling how low it'll go before we see that momentum shift. That's what I'm looking for. Okay, a break of the bull market support band. You can see that we've gotten rejected many times by it, in fact. Okay, and ultimately we need to get above it, hold it as support, and hopefully continue higher after that. So that's what we're looking for on the Link Ether valuation. If we go look at the Link Bitcoin valuation, you could argue that we are still in this long consolidation range here. Okay, and you can see that it sort of comes to a point here in early 2022. So dubious speculation might suggest that after by that point, by say March or something, Bitcoin could be taking a breather if it does go into some type of parabolic move. And then maybe that'll be the time for Link to finally break out and do something significant. But otherwise we're still looking at a falling knife, to be completely honest, with regards to the Link Ether valuation. And in order to see that change, we want to get back above this line, but we'd also ideally like to get above the bull market support band. So we still have some work to do there. Matic is one I've been talking about for a lot of weeks now. You can see it generally is trending up with time. I do think this is a good one to DCA into. Probably a little bit more upside potential than ADA or Link in the short term. There is a lot of momentum with it. You can see it's been trending higher. So this one again is focused on roll-ups, and I've argued for a long time now that is the future, and that projects need to focus on roll-ups, and Matic is one of those. Okay, so it is a good project. I think it's worth having in your portfolio, and we will continue to follow it. I think just a few weeks ago we were talking about it at like 120. Now it's 188. If you want to get my potential target on it, if you want to call it that, I would say look to maybe the 0.8 to 0.9 risk band is what we're looking for. 720 to 962 at the current time. But again, I don't expect it to make it there anytime soon. So by the time we do make it there, those values will probably be even higher. Okay, so that gives you an idea of what I'm thinking. Is a $10 Matic possible? Yes, it is possible. It is possible, assuming Bitcoin stays healthy. And remember, we still have a ways to go here, in my opinion. It was, it was the whole idea that lengthening cycle theory from the halving, from the market cycle bottom, we use that to understand that we're likely going to put in a new all-time high. It's just a matter of time. And it was true, okay? We literally put in an all-time high one day after proving that the cycle did lengthen from the halving. Now I know a lot of people are going to call for a double top, and look, I mean, Bitcoin is at least giving the bears the chance to say they were right, just like it gave them the chance to say they were right here. And even if they are right for a few more weeks, okay, I would still argue that eventually they will be wrong, just like they've been wrong consistently for a long time now, okay? As I said before, what Bitcoin needed to do was hold the line after bouncing off the 50 week. After it bounced off the 50 week, we needed to hold the line. We did that. We said clear skies ahead. We should be able to put in a new all-time high. We did that. We've seen a fairly nice pullback. But even when you look at that, if you go look at the weekly RSI, the weekly RSI is still not even in overbought territory. I mean, forget bubble. I mean, people are talking about this as being like we're in like a manic phase and whatnot, and this is a double top. I don't see this as very manic. I don't think retail FOMO is in Bitcoin right now. I mean, it's probably in some of the meme coins, but I don't think we're really seeing retail FOMO at the moment. I think most of the people buying Bitcoin at this stage have probably been here for a while and are not new participants. And I would speculate that new participants will only come after Bitcoin breaks 100K because that'll make headlines all across the world. Okay, so looking at Bitcoin, it still looks like it has a decent amount of upside over the next, several months. I would say, I've been pretty adamant. I think we're going to go into 2022. Obviously, we need to take this one step at a time. If we have a parabolic rally over the next couple of months, we'll take that into consideration. But as of now, things look relatively healthy. Bitcoin USD is in a general uptrend since 2018. We visited it in 2020, again in 2021. We're just slowly moving higher, right? We're slowly moving higher. Some other things to watch. Okay, so Ethereum is still consolidating below this range. I've argued for months now that we're likely just in long reaccumulation. Could we have a few more weeks to go? Yeah, we could, right? We could. And as far as I'm concerned, the longer we have to go, the better, okay? Give us as many weeks as possible. I would love to have 2 more months of Ethereum trading below the 0.5 risk band. I don't care if we have a year of it. If Ethereum wants to just stay between the 0.4 to 0.5 risk band forever, fine with me. Why is that fine with me? Because in order for it to stay at those risk levels, the price has to go up. If it doesn't go up, then the risk levels would go back down. So as long as it's staying at these levels perpetually, I'm happy, right? Because I just keep buying it. It keeps going up. Portfolios keep going higher. Everyone's happy. Sign me up for that. But we'll take that one step at a time. It's at 0.469, the current risk on Ethereum. Okay, so plenty of room there at DCA if you're looking to the 0.5 risk level in terms of where you're gonna buy Ethereum. Okay, Bitcoin now is about 34% above the 20-week SMA, meaning if it does go sideways, we know that altcoins can rally. We're seeing some of those altcoins do that. Matic is one. There's plenty of other coins that have rallied as well. I mean, I know you guys like Solana. This is one that has rallied back up higher. We know that when Bitcoin's above the 20-week and chilling, altcoins can move higher. And if we go look at the Bitcoin dominance, it's actually kind of trying to hold the 20-week SMA. I'm not really sure how important the 20-week SMA is for the Bitcoin dominance. It hasn't really respected it that much in the past. But maybe we'll look to see in November what happens with the Bitcoin dominance, if it continues higher or not. Speaking of the Bitcoin dominance in relation to Ethereum, if we go look at the Ethereum Bitcoin valuation, Ether Bitcoin is still holding up relatively well. Over the last, say, 8 weeks or so, 6 to 8 weeks, it's down 14%. But all things considered, given it's Q4, it's holding up relatively well. It's unclear if the opportunity will present itself for a timely Bitcoin to Ethereum trade by the end of the quarter. We'll take it one step at a time. I do think it's somewhat irrelevant. I'm DCAing Ethereum with US dollars anyways. I'm not trading my Bitcoin for Ethereum right now because I still think Bitcoin has a decent amount of upside to go for the duration of the market cycle. Okay, the dollar is something we need to keep an eye on. We are getting rejected still by the 100-week SMA. Ideally, for the stock market and for Bitcoin, the dollar will not break through this level. Okay, we have held it as support in the past. Maybe this will hold resistance for us, and that would be good for the stock market. Speaking of, we talked about the stock market a couple weeks ago and the idea that anything below 0.75 risk is fair game in terms of DCAing with a fairly moderate approach. We went below 0.75 risk for a few days. And you can see that already the S&P has already been putting in new all-time highs. Okay, the S&P has been putting in new all-time highs. The Dow Jones has been putting in new all-time highs. So I think it is another testament, right? That buying the dip does tend to work out. Eventually, the bears will be right, and we'll see a more significant correction. But how often are they going to be wrong before they're right? Okay. Something else we'll go look at is Tesla. I do own Tesla for full disclosure, and we are back in price discovery mode. I do have high hopes for Tesla. If you're looking for some diversification and you don't want to do index funds because you think they're not risky enough for whatever reason, Tesla, I do think, does provide a decent amount of upside potential. The risk on Tesla right now is 0.641. I would say anything below 0.75 is fair game. Again, with stocks, I go up higher risk levels. Why? Because I'm not worried about 80% drops. And think about Tesla as sort of like an investment into a company that's sort of revolutionizing the world, just like Bitcoin and Ethereum and cryptocurrency is. Okay, there are a lot of different companies that do that type of stuff. If you're looking for some type of diversification, Tesla does provide a timely solution. And if you go look at, say, the Tesla Bitcoin valuation, let me pull this up. So Tesla, and we'll divide this by Bitcoin USD. You can see, in fact, that Tesla Bitcoin's valuation since 2017 is still doing relatively well. And since December of 2017, when Bitcoin had its market cycle peak, the Tesla valuation against Bitcoin is up, 400%. Right? So Tesla has actually been holding its own against Bitcoin this market cycle. It does go to show that you can make money in markets besides crypto. All right? So just want you guys to keep that in mind. We also do talk about some index funds. I don't know. Yeah, they're not on here. FC Rocks, FCILX, and FNILX are the three main index funds that I buy. Again, they are 0.0% expense ratios. So if you're looking for something to have some diversification in and remove that idiosyncratic risk on individual stocks, I would say look for index funds that either have 0.0% expense ratios that give you exposure to the entire market, or find ones that have relatively low expense ratios so that they're not taking a huge cut. There's a lot of evidence that suggests that passively managed funds do perform better than actively managed funds, and or that actively managed funds are usually not worth the fee that the manager takes, the hedge fund manager or the fund manager takes. So you have to keep that in mind. There are some times that the fund managers do make you more money than maybe the general market, but there's also even more evidence to suggest that if they do, it's because they got lucky and it's not something they can keep doing consistently. Okay, so finding a good index fund here or there and then just DCAing into them, I think is a good strategy, at least to help get yourself diversified. If you don't want to be diversified now because you just want to be 100% crypto, look, just admit you're taking on that risk. Sorry, I don't know what that was. Just admit that you're taking on that risk, and then if crypto goes parabolic again, then you can diversify out of it, right? So imagine Bitcoin does go parabolic again, and it goes up into the six figures. Just like we saw this move here, I know some people took this opportunity to DCA out and get diversified into other asset classes. Imagine it does it again, and we do something like that, okay, then I would say use that opportunity to get diversified into other asset classes, because if it does drop, which it probably would at some point, right? It probably would at some point, you want to make sure you protected some of that wealth, right? Crypto can help. Concentration helps grow the wealth, which is what everyone wants to do. But then at some point, once you've grown the wealth, you want to protect the wealth, right? You want to protect it. You don't want to just want to watch it go away. So just keep that in mind. I'm not saying you need to go buy index funds right now if you don't want to, but you should at least have a plan how you're going to protect your wealth once you actually create it. It's not a good feeling if you create the wealth through a bull market and then you watch it just completely get washed away during a bear market. It's not a good feeling. Ask anyone from 2017, 2018, and they'll tell you, okay? So I think the general strategy is the same. I mean, if you don't have a sizable Bitcoin position, you could still DCA it. I mean, it's still a relatively low risk level, right? 0.518, assuming, I mean, the 0.5 risk level will probably be at 59K in a few weeks. So if you want to keep that, if you want to take that into consideration, you can still buy Bitcoin. For me, I'm happy with my Bitcoin position. I'm focusing mostly on Ethereum. I'm picking up some Matic, as I've mentioned. I think Matic is a good one to pick up. Risk level is still below 0.5. If you're curious where the 0.5 risk level is on Matic, it's all the way at, let's see, 245. Okay, so anything below 245 on Matic is fair game if you're going with moderate risk tolerance approach. You might say, well, if it doesn't count for diminishing returns, aren't you really DCing at 0.6 risk? Well, sort of. We're also saying that, hey, look, altcoins have more intrinsic risk anyways. We admit that we know we're taking on more risk already, but it's the risk you have to take to some degree just to get a position in a bull market, okay? So Matic risk is at 0.443. Some other projects I think that are worth DCing, as I've said before, Ethereum for sure. if you don't have a position in Link, I would argue it's still a good DCA. Look, I mean, it hasn't performed that well against Ethereum. I'm waiting for it to actually break out, for the Link Ether valuation to break out, and then I'll continue buying Link USD. I do have a sizable Link position, but right now what I'm doing is I'm focusing mostly on Ethereum until I see this trend change, right? I mean, this trend is showing that Ethereum is outperforming Link, and Ethereum has less risk than Link in the short term, or I mean, just because it's a blue chip, not in the short term, but it has less risk, and therefore I'm mostly focusing on Ethereum right now. If Ethereum goes above 0.5 risk and then we see Link break out here against Ethereum, then that could provide a timely opportunity to DCA Link if you don't have a position. So that's what I'm looking at with Link right now. ADA, I think it's a good, general DCA time for ADA over the long haul, 0.361. But again, I would not expect any major breakout in the short term until they've actually developed out the ecosystem a little bit more. DOT, I think, is a good one. All right, I've said before, DOT is a good one to DCA. Last year, I think the DCA was between $3 to $6. This year, I think it's mostly between 30 to 60. And we'll just have to wait. I mean, we'll just have to wait and see how it works out. Remember, you can be earning rewards on all these interests, whatever you want to call it. DOT, you can earn 12% on a lot of different exchanges. We do have ITC stake pools for ADA and Avalanche if you want to go earn interest there. You can find that at staking.intothecryptoverse.com. Avalanche is another project I think is worthwhile. Note the risk level on it right now is relatively high, 0.534. So maybe wait for that one to come down a little bit if you want to stick to moderate risk tolerance approach. Monero, I like the coin. I don't really like the gains, so I'm not DCing into that one. VeChain could be a timely one. I mean, the risk is below 0.4. It actually performed exceptionally well, during the first leg of the market cycle, so that could be one to look at. XRP is, still going through the SEC stuff, so it's really hard to say too much about XRP because it hasn't really done a whole lot. Again, if you look at the XRP Bitcoin valuation, as I've said before, it used to be, once upon a time, it used to just be you buy it below 10 to the minus 5 against Bitcoin, and you sell it above 10 to the minus 4. Now it hasn't really been doing a whole lot. If it makes it back down here, maybe that'll be a good buy. But I'm not DCing that one right now either. Algorand, I think this is a good project. It's currently at 183. The risk on it right now is relatively high. Note the risk confidence isn't super high though. Algorand, I do think, is a good project, and it is interesting in terms of not requiring the delegated or the stake pools and whatnot like a lot of other projects do. Maker, I think it's a good project. All right, so this is a decent one to DC in as well. BNB, BNB is one of those ones where it probably will do well. Okay, I mean, if you're betting on people, BNB is probably going to do relatively well. Risk on it's relatively low. That could also be another good option, right? I mean, a lot of the layer ones, honestly, are probably going to do relatively well, assuming Bitcoin does. So the thing is just figure out what layer ones you want, right? I mean, there's Bitcoin, there's Cosmos, there's XTZ, there's Solana, there's Luna, there's Cardano, there's Polkadot, there's Avalanche, there's Ethereum. There's a lot of different ones that you can have in your portfolio. It's just a matter of figuring out which ones you want, okay? So, with that in mind, I think people more or less have the general strategy, right? I mean, it's just mindless DCA on the projects you want right now. Bitcoin is about 0.5 risk. If this comes back below 0.5 risk, I'm going to go 70% weekly DCA back into Bitcoin. Until that happens, I'm still just going to keep mostly speculating on Ethereum, 70% of the weekly DCA, and then 30% into alts until the status quo changes. And the status quo has not changed yet, so the strategy has not changed yet. The successful people in crypto, I think, are the ones that just stick to a strategy week after week after week after week. Not the ones who jump around to new strategies every single day because of what was shilled somewhere. No, just come up with a strategy, stick to it, pick up what you want, right? Pick up the altcoins that you find interesting enough. Obviously, you guys know the ones I like, and then take profits along the way. And you really can't go wrong, right? You really can't go wrong. So I think we'll wrap it up there. Thank you guys for tuning in. Leave a comment down below if you have any questions, and I will see you guys next time. Bye.